Hello everyone, this is Dan Gramza and welcome to Gramza Market Studies for Monday, October 20th. I want to thank everyone for coming up to me today either before my presentation or during or right at the end, mentioning that you watch the videos. I really enjoyed being in Canada and I want to thank you for taking some time to say hi to me today actually, and I really appreciate that. It's nice meeting a lot of you and also seeing some people that my path has crossed before. Starting with the NASDAQ market, well, we can see some improvement from the last couple days, and let's talk about what that represents. You know, we had buying coming in the last couple of days actually, as we mentioned before. That's what these shadows on the bottom represent, and we did get some follow through on Friday, right? We had some positive news come out. The issue for us now is who is this that's creating this? We'll talk more about that as next week develops. This large red candle here, though, is going to be critical for us, and the next 3 trading sessions are also going to be important. And we'll explore those ideas as they develop. Right now, I am looking for follow through to the upside on Monday. Let's take a look at those currencies. You can see here in the euro, basically I was looking for a sideways move. That's what we have. I'm looking for more of the same on Monday for that market. I should also tell you that the Japanese yen, I like to see this move, but it's not super bearish, and so we have to be very cautious here. But the difference between the bearish and the bullish move in that particular market is 350 ticks, or $4,375 is the magnitude of change here. Again, that's just a reference to give you an idea of what that means in terms of movement. Let's take a look at those interest rate markets. The 10-year notes did trade below this bearish level, which has moved up yesterday. The difference between the bearish level and bullish level in that market for the notes is $2,125 per contract. Again, just to give you a feel for what that represents. Over here in the bonds, the difference between the bearish and bullish level in that market is $3,406.25. Again, give you a feel for what that kind of movement means for that market. And let's move on. And let's take a look. I'm looking for weaker prices, by the way, there. In gold, I was looking for a sideways market, and that's really what it gave us. It broke to the downside, popped right up. This is a market that wants to go higher, but it doesn't have a reason to do it at this point. Does copper? Well, copper did trade above this bullish level. The difference between the bearish and bullish level in copper, to give you a feel for that, per contract is $875. That's what that magnitude of change would be, and I am looking for follow through to the upside on Monday. Let's take a look also at the energy market. Crude oil traded above this bullish level, and the difference in crude oil between the bullish and bearish level in this market we talked about, I think we did, that's $8,250 per contract. And let's move on and let's take a look at what's happening in the grains, and basically it's weather. You know, drier weather, as you and I have talked about, it's going to have an impact here. And right now the harvest is improving, so we're seeing some downward pressure. I'm looking for a sideways move, though, when it comes to Monday for our friend, Mr. Bean. And that concludes today's market studies. Thank you for being with me. I look forward to being with you again. And in the meantime, take care.